Hello and welcome back to our channel. In today's video, we are going to discuss a very important topic for all the crypto traders out there. We will be talking about Bollinger Bands and how you can use them to improve your crypto trading strategy. First, let's understand what Bollinger Bands are. Bollinger Bands are a technical analysis tool that is used to measure volatility in the market. They consist of a simple moving average, which is the center line, and two standard deviation bands, which are the upper and lower bands. So, how can you use Bollinger Bands for crypto trading? Well, Bollinger Bands can be used to identify potential breakouts or breakdowns in the market. When the price of a cryptocurrency moves towards the upper band, it can indicate that the market is overbought, and a correction may be coming. Conversely, when the price moves towards the lower band, it can indicate that the market is oversold, and a potential buying opportunity may be present. Another way to use Bollinger Bands is to identify the trend of a particular cryptocurrency. If the price is consistently trading above the centerline, it could indicate an uptrend, and if it's consistently trading below the centerline, it could indicate a downtrend. It's important to note that Bollinger Bands are not a standalone trading strategy and should be used in conjunction with other technical analysis tools. Now, here's a bonus tip for you. When using Bollinger Bands for crypto trading, it's important to take into account the volatility of the market. Some cryptocurrencies are known to have higher volatility than others, and as a result, the Bollinger Bands may need to be adjusted accordingly. And that brings us to the end of our video. We hope you found this information helpful. If you have any questions or comments, please feel free to leave them in the comments section below. Don't forget to like and subscribe to our channel for more informative videos like this. Thank you for watching, and happy trading.